Good morning, fam. Welcome to Profit with Professor. I am Professor Ward, and today I'll be seeing if we can capitalize from the CAD news after the governor's speech. And so we'll see what happens. See how much he can move the market. Market already moved this morning. I wasn't able to jump on. I didn't have too much time. But I was able to put a couple of trades in before the news came out this morning at I think 5:30. CAD news came out, so I put these two orders in, both buy orders. That's what I was looking at, a potential uptrend for dollar CAD, temporary uptrend. I put this order in at the bottom here, but as you can see, it wicked, but it didn't pick it up. It's just still sitting here pending. And then I had a buy stop order up here. It did pick that up, but it's already pulled back from it. So when the news comes out in 10 minutes, I'm anticipating and hoping, because I need it to, that price action will either come down, grab this other, go down a little deeper into this daily open price, grab this other buy limit order, and then take this one with it, and both of them come up here and close. Now, if that does not happen, and when CAD news comes out, the CAD news happens to be weak, then what will end up happening is, if it's weak when it first comes out, we'll get that that false positive where it'll go up first. It'll probably trigger these two orders, and once it triggers these orders, as you can see, this one here is going to cancel this 50 out. So 50 will get shaved off from here, and then the remainder will continue down. And if it goes up a little more, I have another one sitting up here. So all in all, I'm looking at a downtrend on dollar CAD, as you can see here, but I'm anticipating the possibility of it pulling back up. You guys can see right here, there's more resistance. I put 90 and 45 minute. Let me go to 90 and 45 minute. So here it is. This is the 90 minute. This is the area on the 90 minute. I'm looking at possible major resistance happening. We also have a newly created demand level here. So that's another reason why I have this buy limit order. So if they go down first, maybe this will get triggered. And then when they go up here, these two will get triggered. And then we should just experience a continuation of the downtrend. That's what I need, because that's the trade I'm in. That's what I need. So we'll see what happens. We got about 9 minutes left before we see what happens with the CAD news. Give me 1 second here. As always, if you guys have any questions, just drop them off in the chat, and I'll do my best to answer them. I love questions. Anything regarding trading, then we'll go ahead and tackle that. If there's another CAD pair anybody wants to look at and monitor while the news is going out, we can do that. I'm not in any other CAD pair other than dollar CAD. So we have CAD yen is probably one to consider, or either a Kiwi CAD, something like that. Matter of fact, let me see which. Give me 1 second. I'm gonna see which pairs. All right, so today during our New York session, best pairs to trade that are related to CAD would be Euro CAD, Pound CAD, and Dollar CAD. Those all have volatility. There's no other CAD pairs that would be best to trade at this time. So it's going to be Euro CAD or Pound CAD. Those have the most movement. They're both kind of the same. What's up, Casey? So if anybody wants to look at Euro CAD or Pound CAD, I'm already looking at Dollar CAD. We can look at either one of those if you guys want to. Give me 1 second. All right. Hello. I guess it's pronounced I noun or AI noun. 2013. How you doing? Glad to have you here. Once again, I'm just going to be looking at the CAD news, seeing how this chart moves over the course of time as the governor of the Bank of Canada, Governor Macklem, as he speaks, we should see some movement. If he has something good to say, we'll see some nice movement. If he doesn't have anything good to say, it'll trickle and barely move. But we're going to find out what he's going to talk about. And typically when the Bank of Canada gets on and they start talking, they're talking about how money is going to be regulated. So they regulate money by adjusting interest rates. And by adjusting interest rates, you end up affecting the value of that country's currency. And if you affect the value of a country's currency, what ends up happening is people think differently. And the way that they think is going to affect the way that they spend. And so that's what makes this conversation that Governor Macklem is going to have today important for us to trade. So hopefully he says something that either scares people or excites them, because that's what we need for our trade to move. We don't need people to feel comfortable. We want people to feel excited or terrified. Either sentiment, and we're going to make some money. So that's what we're going to see today. See what Governor Macklem pulls out of his little magic financial hat. And see how he moves the public. This is why when you trade, trading is less about technical analysis. Technical analysis can be learned by a 5-year-old. Anybody can learn technical analysis because it never changes. There's a pattern and there's a way and a lifestyle to different instruments. So as long as you know the pattern of the instrument, if you trade something long enough, you'll start learning the way it moves. So technical analysis is not that hard. That takes less than 6 months to learn. The hard part that takes the longest part to learn, and we got 4 minutes before the news comes out, but the hard part to learn is the psychological part. And you guys will keep hearing me say this over and over again. You got to learn how to manage yourself. It's your fears and your excitements that get you in trouble when you trade. So you got to be able to manage your emotions. And I'm going to show you a couple of my the previous charts so we can look at that. Matter of fact, let's do that while we wait. We got 4 minutes. Let's go through some of my previous trades. A lot of you were on here. Casey's been following me for the last few weeks. I think he's been on, so he can vouch for me that these were live trades in the past. So based on the 4-day, I'm in Bitcoin. This is where I'm heading with Bitcoin. Let me pull up the actual chart. So you guys can see I had 2 orders for Bitcoin. I had a buy limit order down here and a buy stop. The buy stop got triggered. It was positive, and then I went into drawdown yesterday, and now I'm positive again. I'm back up. I'm just waiting for it to get up to 37,400. So if anybody's interested in trading Bitcoin, I do trade Bitcoin. I trade futures. I trade stocks. I trade Forex. But I mostly just trade Forex because that's the fastest money out there. Everything else is slow. So, but I do dabble in it just to diversify my portfolio. So if anybody trades crypto and you like what you see on the chart, I'm not advising you, but if you like what you see, then I'm taking this trade up to 37,400 and you can join me. We have 3 minutes. Well, how am I doing on Swiss yen? Swiss yen's getting on my nerves. Oh my goodness. Look at this. I've been in this trade shorting from here. And look, that was a nice entry to short. It went down, went against me a little bit, went down. But look, went against me again. Really thought I was in the clear. Look at this. I mean, how would you feel if you were 1,100 pips in the green, just making money, and this thing came all the way back to you like this? That just chaps my hide. But I'm waiting again. And this was September. So you really think you're in the clear from September and you're a positive 1100 pips, and my silly, stupid butt didn't put I forgot to put my stop loss here. I was just so excited to see all that money. And in any other situation, you're thinking it's not going back there. It's already falling. But yeah, it went back. So I'm waiting still again. So if anybody wants to get in this trade, here's a good buy. A sell stop order. You can put a sell stop at the same price of 148.66 and wait for it to come down to where I'm at. And then hopefully we can enjoy this together. 1 minute left. Let's go back to dollar CAD. Let's see what happens. So remember, I'm waiting for dollar CAD to come up here to this 90-minute level or 45-minute level up here. Let's go on the 9-minute. See how that works out. Let's turn on the countdown. So it just started. This is it. So the news came out about a minute and 20 seconds ago. This is it. This red candle right here. So we're just going to see how this candle works out. Right now, dollar CAD, if I had to guess, everything looks up. Looks like an uptrend. So it looks like we're good to go on the uptrend. It doesn't look like it's going to come back down to here, at least not from what I see right now. Because whatever demand level was in here or in here, it got taken out by this. And then whatever was in here got taken out by this. So this is all fresh. So it looks like it, and this is all uptrend here too. So it looks like it's just gonna go up. Let's go down even lower. Let's go down to like a 3-minute chart. See what we got. So as you can see, price is opening and closing above the minor support level that I have here. Minor support means that it won't hold and cause it to turn around completely, but it'll only hold temporarily. So you can see it hit support, went below it, but it turned and it's starting to go back up. And then eventually it should come back down and break through this. So minor just means it'll work maybe 1 or 2 times and then it'll get broken. So that's why I put minor here. And this is the first time it got broken. This is the turn right here. So I'm expecting an uptrend. So if you guys wanted to get in this trade, you would do a market order long if you agree with what you see. Because it's news, I'm not going a long way. I'm just going to go from here to up here. So I'm going up to 134.25. So market order long up to 134.25 is what I'm doing. This is the dollar CAD, and we're trading CAD news as Governor Macklem speaks. Depending on what his conversation or the dialogue is, that's going to determine how people feel. So unfortunately, we got to wait a good, typically 15 to 30 minutes, because he got to warm them up and throw them off a little bit and make them, he got to do a little intro before he gets to the meat. So if he jumps to the meat right away in the conversation, then we should see some movement quicker. If not, it's gonna, I'll be on here till 9. That's why I put on here, I'll be on here till 9 a.m. Give it at least an hour. Now I do see them running into this right here. So it could pull back, which is what it's doing. And let me see what level that's at. That's at 66. So let's see if they come down here. Let's see if there's something down there. Nope, look like they took that out already. Oh, maybe they didn't. Hold on, I'm just seeing if they're gonna come down to this level here. Oh, that was a nice hammer they took out already. No, there's nothing in here. Oh, this right here, I like this. So let's see what this is. So I don't know what they're gonna do with this here, but they left quite a bit of piece of it here. So maybe they'll come back and get it later. They never hit it. And this is downtrend as well, so let's see what they do. They might, it just might come back down. Where's the daily open? Let me see here. Oh, it already hit a daily open up here. That's why it came down. Where's the other one? Oh, the other one's back here. Oh, this is the one I tried to get in on. And it hit it, but it didn't trigger because it didn't clear spread. I think the spread was too high. That's why it didn't clear it. Suckers. This is why I like to get in early. I should have put my price a little higher. I forgot to add spread. Normally, whatever price I want to get in, I add spread so that I can clear it. So I should have added spread to this 130.60. And if I'd have added those 2 pips of spread, my entry would have been up here. And as you can see, it would have hit nicely. And then I would have took off with this. And I probably would have closed it out right here and just waited for the news or something, because I'd have been too happy to see that money. But that's not how it worked. And I was asleep, so I didn't get to see this. This was 2 in the morning when it hit, so 2 in the morning my time. All right, so we don't have any action just yet. He hasn't spoken or said anything worth saying. All right, let's see if we have any questions. Any questions? Nope, no questions. All right. Let's look at, we have EuroCAD and oh, this is definitely old. Delete all of these. So I'll look at EuroCAD. I'll chart that while we're waiting for $CAD to make up its mind to do something. We'll chart the EuroCAD for fun, unless I already have it up here. Euro dollar, Euro Kiwi, and the S&P. All right. This is an old EuroCAD chart. So I have an old EuroCAD chart saved in here, and I looked at the 10-month and the 1-week chart. So here's the 1-week chart. As you can see, I have a buy limit order sitting here waiting in this demand level at 143.80, taking it up to these two take profits, but it hasn't pulled back. It's just been going long. It went long 500 pips, and now it's pulled back down to about 230 pips now. So it's pulled back about halfway. So it looks like it's coming down. So if it does come down, then it should come down to here. So I must have put this in last month because this candle right here wasn't created until February the 20th. And if I'm already identifying it, then maybe let's say this candle must have already been, something was already created here. I'm going to, let's say this one. That was the beginning of March. We're now over a month away. So this has been a month that this trade's been sitting here. So just waiting for it to pull back. This is what it means to trade. You got to learn how to exercise patience. If I'd have jumped in this trade because I knew it was going up here, and I'd have jumped in up here, let's say, I'd already be in drawdown because I got, FOMO, as they call it, the fear of missing out. So when something takes off, you jump in because you don't want to miss it going up here. But now you're losing. This is 200 and something pips. You can't tell because it looks small, but this is a 200 pip movement backwards. That's 300 total. So you'd have been drawdown. So notice I'm exercising patience. I can see an immediate retest here, pointing to this rally, base rally, which is acting as a demand level. And so I have an order to buy here at that demand level. Now what I'm going to do is I'm going to DCA is what it's called, dollar cost average my positions. What dollar cost averaging means is that if you don't know exactly where the price may go, then you can put a couple of orders here and split your entry over here. So I'll do one right now. So if I'm going to buy, let's say, a standard lot, and I want to split my standard lot up. Oh. I think I saw something. Hold on. Dollar CAD is moving. It's moving up. So as you guys can see, I'm on my way up here to the dollar CAD. I think I have a separate dollar CAD downtrend trade. Yeah. So this is the dollar CAD downtrend trade here. There we go. All right. Oh, that thing took off and then went back down. That's what it did. I saw this candle move, so that's why I was like, oh, is that it? Did he say something? All right, we're going to mark off where we are. So let's mark that off. That way when we come back, we can see where it is in reference to this blue line. So it looks like they're creating more demand to go up. All right, let's get back to the Euro CAD. So if we're looking to dollar cost average this trade and you don't know exactly the price, what you can do is take the area that you believe is going to turn in and you can split up your entry. So I'm going to go ahead and modify this here to show you. Can this be divided into 3? Let me see, 250. Nah. So let's find something that can be 150 can be divided into 3. So let's do 50, 50, and 50, or let's do 50, 51, and 52. Let's do that. All right, so I'm going to modify this here, and I'm going to make this 50. And the 3 prices we're going to use are going to be, let's do this here. So this price is 144.44. This bottom one, but we don't want to be all the way at the bottom. We want to be right where the color change is. That's where we want to be with that one. So that's 144.49. And then we want to do the middle. And the middle would be the middle of this candle here. So what I end up doing is taking my fib tool, marking that off. And I just kind of look to see what that middle price is. Why is that all the way to the left? All right, so 143.86 is what we have. So $1.43.86. So that's the one number we will not change. We're just going to leave that there. And then this top one, we'll change that to 144.45. Just to get a 1 pip early entry in case it wicks like it did my other trade. The middle one will keep the same, and then this one down here will change to 143. It's at 49, so we'll make it a nice even 50. And the middle one we'll leave alone. All right, so let's do this here. And we're gonna do a 50. And the first one was gonna be 144.50, I think the number was. Is that it? Yeah. So then let's take that away. All right, so you guys, that's our first order for our dollar cost average position. It's called DCA. So if you guys want to go back and study that concept, you can. I'm typing it in the group right now. So dollar cost average is a concept where you split up your position size in case you want to maximize your margin, or you might be wrong. You kind of like want to test the area out by splitting up the position. That way, if you're wrong, like only one trade might be in or so. It won't capture your whole position. So let's buy another one for 51, just so we can see the difference in the numbers. And then what was this one? 143.86. We'll just leave that one alone because it's dead center. That's what I typically do. And then this last one is 143.50. So we'll make that 52. And we said 143.50. All right, let's see how that works out. And there we go. That's how you dollar cost average. So I just took my, let's say if I had 150 unit position and I wanted to dollar cost average it, I would just split it up like this. So I have 3 basically 50,000 unit positions. Now, if you're in the US, the reason why I did this is because we have something called FIFO, first in, first out. I'll put that in there as well. So the U.S. trading, we have a rule called FIFO, first in, first out. That's what that stands for. So we cannot ever have a position size that is equal in units as another one at the same time on the same pair. So if I'm trading EuroCAD, I cannot have two 50,000 unit positions or two 48,000 unit positions. I can't have two positions on the same pair that equal the same amount of units. I have to change it. So we just typically add one more to it. Whether you add one at the end, it could be 50,001 or it could be 51,000. Whatever your account will allow you to type in. You just need to make it different if you're in the US, or else it'll cancel out and it won't trigger at all. Nothing will happen. It'll just cancel out that order. We also cannot hedge, so you can't go long and short at the same time. So those of you who trade in the US, this is why it's much more difficult than anywhere else. If you're a foreigner, I don't know how you're losing money. I don't know how you're losing money if you can trade both ways. It doesn't matter what position size you're in. You almost have a winning shot because you can only be wrong or right. There's no other option in trading. Either when you go long, you're wrong or you're right. That's it. You got a 50-50 chance of being wrong or right. And so the fact that you guys can go both ways to figure out which way is right and which way is wrong, to me, that's kind of, it's real easy. So if you master that, then you'll be good. But if you're here in the US, you're going to need a strategy and you're going to need to think a little harder. So those people who are really good at trading and they're in the US, them some people who you want to, piggyback off of and kind of see how are they surviving and making it in a market when their abilities to trade are limited. So this is what I would do if price action comes down to this area, which I do believe it will. Then it'll grab us and it'll take us up. But let me see if it's actually in an uptrend or if it's in a downtrend. This might not even hold. Oh, I got it. Okay. So we're at mid pivot is what it is. All right, let me see here. All right, so it did come below and it's on its way up. So yeah, it could be on its way up to one of these two here. So we'll wait and see. It's been going up for a long time. Since August of last year, it's been in an uptrend. So hopefully we're able to jump in on some more of what's left of this uptrend, but we're only jumping in if it pulls back. And if it pulls back, it should pull back to this area here and then continue the long. All right. Any questions? Gonna go back to dollar CAD. See how we're doing. So since I put this line here, this dark blue line, price action has gone down 2 pips. So we put that line in at 88. It's now at 86. So it's just kind of sideways ranging, but this is a breakout formation to the upside. So let's hope that happens. Come on, Governor. You've been talking for 22 minutes. You ain't said nothing good yet? Should have been said something. Casey says he has a stock. Yeah, I'll look at it. Not a problem. Anything for Casey. Casey's always here. One of my biggest fans, so I appreciate it. Casey, let me know. Have you taken a trade yet that I've charted, and has it been working out for you? I always want to make sure people are okay. All right, let's take a look at that one. I just got an alert that my euro dollar is going in an uptrend. Let me look at that real quick, Casey. Hold on. Oh yeah, I think you guys were on here yesterday. So I did an actual video of this here. I did a private video, so you guys won't be able to see it because I listed it as private. But I had told you guys I was holding this trade. Is this the one? Oh no, this is another account that I have. So I was holding this trade, and it came all the way down, and it wicked up and grabbed one of my positions and then took me down, but I didn't want to jump out of the trade, so I just held it knowing it was turning around. I thought it was going to turn here, but it didn't. It kept going and turned up here. And then so I marked off these two levels, the proximal and the distal area here, and I put this institutional buying range here, and I decided this is probably where they're going to turn at. And this was yesterday, so as you can see, it already started turning. And now the trades that I was in, I ended up adding I added a 109.92 and a 110 as buy orders to go long. I also down here, let me see here. Give me a second. Where is it? What did I do with it? Hold on, let me see if it's in my ideas. So this is the video I did yesterday, but I don't think you guys can hear the sound of it. Hold on. Right now, if we go to the 200, let me know if you guys can hear this sound. That is the last time frame that I made my decision on. It was based on this red candle here and this one. The reason being is that this red candle gives me a proximal price for demand. Can you guys hear that? The distal price is based on this candle here, and it is $1.09 and 2 pips. Proximal just basically meaning as price action was coming down, this point or this price was within closest proximity to price action as it was coming down. And then this price down here was obviously the furthest distance away from price action as it was coming down. So they just basically call that the proximal and the distal line. Between there, I found what I believe to be the institutional buying range, or the area within which the institutions are going to start turning. And so I just kind of centered in as much as I could, and I believe that this would have been a primary area. We can see that it was. As you can see, price action is starting to open and close above this. That's a good indication of a continuation of the uptrend. If it pulls back a little bit, we have an opportunity to jump in on a buy limit order at 109.20. If price action opens and closes above this proximal price of $1.936, and if it does that on the 3-minute chart, not on the 216-minute chart, but on the 3-minute chart, if price action opens and closes above 109.36, then that is a good indication that price action is going to continue the uptrend. All right, I'm going to stop the video and then I'll just talk through it. But as you guys can see here, this was yesterday. I don't know what time the video was. Does it say on here? 15 hours ago. That's all it says. So 15 hours ago, I did a private video for our group explaining to them what I believe the euro dollar is going to do. I was already in drawdown, as you guys can see here. It's another account here. So I placed these two buy orders here, believing it was going to go up. And then I was going to shave right here off of the 1 hour and then carry the rest of it until it got up here, close all of it out, and just start all over. So if we go back, this buy stop order. So if we go back here, let me turn this off. 109.40 should work out for us. If we go to the 1 hour chart, so let me turn that off. So now, I guess I didn't save that video. I mean that screen, because I don't have the chart for it. I don't know where it's at. But anyway, it was 109.20 and 109.40. That's all I got to do is change this. Let me do that. $109.20 and then 109.40. And let's go back to the 216. So the video was showing you, it was at these two candles when the video was being recorded. And now I'm waiting on P2P to finish thinking. There we go. So as you guys can see, I have two orders that were sitting here. And I said if they got triggered, the only one that would have gotten triggered would have been the buy stop order. Now, I didn't add an order here live because I said in the video, I'm already in a position. I'm already in drawdown. I didn't want to add more pressure to my margin, but I did tell everybody in the video, if you guys believe that it's going to go up and you like the analysis I'm giving, then this would have been an opportunity. So if anybody had taken it, they would already be in the green and be up by about almost 50 pips. And that's just from 15 hours ago. You would already be up 50 pips. So right now, I then in the video talked about the 1 hour chart and what I thought was going to happen when price action gets to the 1 hour. And here it is. Oh, let me get rid of that. That stop loss doesn't belong there. That belongs here. And then I think I had made it 95. That's what it was. I didn't save this chart, so sorry about that. That's why everything's off. I did the video, but then I forgot to save the chart. And then I must have deleted everything, charting something else. Every time I chart something, it saves the information from the last chart. So I gotta do these up here where I save them so that I can always refer back to what I was thinking. So I don't have to redo it again. I like to save time. So anyway, this is what the chart looks like. You guys can still put the order in because as you can see, I wouldn't put this buy stop order in, but if you guys are interested in going long on euro dollar, looks like they have the potential or the probability of coming back down to this demand level that they just created. So 109.20 is still a good price. I would not do 109.40 because I can see here it's not going to hold anymore. They have an immediate retest pointing to this area. They're going to pull back from here and keep shorting. So this was only good going long. Once it turns around and starts going short, you don't want to have a long position here. You want to have one lower than that. And these are about 20 pips away. So that's a nice sizable amount of drawdown if you got into this first one. So if you weren't already in a long and you want to get in a long, 109.20 is a good place to get in. because I do believe they got to deal with this area of supply. Why are some of my candles blue and white and light red? That's because I have on an oscillator down here. It's watching for volume for me. I programmed it with all of my settings in here. You can go in here, there's a settings wheel, and you can customize it so that it does whatever you want it to do. So this oscillator is just managing the amount of orders that are racked up by institutions. And so if institutions are racking up a bunch of orders and they're buy orders, that candle will turn blue for me. And it'll let me know institutions are getting ready to go long. Or they're adding up, sell positions right here. So wherever it's red, I'll give you guys an example. What this means is that from the top of that red candle, if we look at this as light red candle here, from the top of that candle to the bottom of it, so the open and the close price of the candle, and in between that color. So basically what this is saying is from 109.81, 109.75, there were a lot of quite a bit of institutional selling orders or sell orders, which caused selling pressure. So that's all that candle was. As it was being created, it was changing color. And if it changed color, it let me know, oh, they might be moving down to the downside. So it just kind of gives me a little indication. You don't trade it. You just make a decision off of the information. The reason why you don't trade it is because they could be creating a blue candle like these here. And what happened? Did it go up? No. So just because the candles are blue and I can see that institutions are setting up buy positions, that doesn't mean they're about to go long. You still got to know how to read charts and trade and understand supply and demand, support and resistance. But these colors just help me out. Look over here, big blue candle. And yes, price went up, but it didn't take off and keep going up. It actually turned and came back down. So you don't use these to trade. You just use these to gauge. And so let me give you an example. Let me give you an example of what I mean by gauging. When price action was coming back down, I knew they had to deal with all of these buy orders from the past. And so to deal with all this buying pressure, they're going to have to add some selling pressure. And that's why this candle turned white. White is a mixture of sellers and buyers. So sellers became really strong right in this area because they knew they had to deal with all these buyers. These buyers want to push the market up. So sellers had to come in really strong to push past all of that. But as they got below it, they were met by some more buyers in here, obviously. How do I know there's buyers in here? Look how these candles moved the last time they were in this area. It moved up. Why did they move up? Because we have buyers here. So these buyers kicked in, and then when price got to that level of buying, it pushed up. Then they added some more buying, and it pushed up some more. They added some more buying right here, pushed up some more. And because they didn't add any more buying, that's why it started coming down. So now that they're back in this area where they originally started buying, I was anticipating that the buyers are going to kick in again, even though all this red is sitting here. This is what I mean by knowing how to trade. How many people saw all of this red in the market, novices, and added short positions here? And my crazy butt is going long while everybody else is shorting. It's because I know how to read charts while everybody else is just reading what it did last. And they're basing their decision on, oh man, it's shorting, I should short. Yeah, it's shorting, but it's shorting and it's about to hit some support, which is all of this, and it's about to go back up. And you got to know that. And that's why I put these buy orders here. So I'm taking this all the way up. If you guys can find an opportunity to get in, or if it comes back to 109.20, I'm taking it up to 110.75. All right. Let's get to Casey's GRBK. Is that Reebok? What is that? No. Green Brick Partners. You love the stock market, Casey. This company's not new, but they have no volatility. It's just sideways a lot for years. I can chart it, but it's not something I would trade. I need something that moves. You can't make money off something that go sideways or stay still for a long period of time. So unless you have some fundamental information or some type of analysis that is based on real life decisions that this company Green Brick is about to make, and you believe that that information is going to cause a positive effect on the value of this company's worth, then yeah, take a chance and go long. But as far as I'm looking at, since 2012, this thing hasn't moved. You can't make money like this. So had you gotten in down here, because price would have been $1, you would have made 1,600% on your money. But that's only if you got in at almost zero, and then now it's at $36. So that's obvious, because you're basically buying it for nothing. And if you would have got in down here, let's look at when it first went up last. This is here. So since September, it's gone up 57%. That's nice. It's a really good percentage. That's still slow though, because in Forex you can make 50% every month. This is 50% in 7 months. So this is what I mean by the stock market. I hate trading it. I just buy stocks and I just hold them for years and years and years, because it takes a long time for a company to become successful. Companies don't become successful overnight. It takes them years to grow. And so you got to start with them when they're not doing so well, and you got to hang with them until they're doing well. That's the only way to make money in the stock market. But you got to know that when they're not doing well, it's turning towards doing well, not it's not doing well and it's getting worse. So you got to be able to know that. So let's map this out. Right now, I can clearly say they've already broken all the anchors that they had, except this anchor here. It's the obvious anchor left. So the anchor would be this guy here. Let me turn on this here. Oh, sorry about that, y'all. Hit the wrong button. All right. So you're long at 36. That's great, because it is in an uptrend. Take profit is, stop loss is at 30.84, and your target is 45.50. Oh, you're not going that far. Yeah, you'll probably make it. Where'd you get this company from, and why are you trading it, Casey? I never heard of Green Brick Partners. Do they own something that, or do they build for some big company like a hotel or something? Like, what makes them important to you? And you're going to 45.50. So you're just coming in here to this, somewhere in here. All right, let's take a look at it. Oh, you're looking at a scanner. Gotcha. Okay. We got to get you learning how to read charts for yourself. I want you guys to keep in mind, there's nothing wrong with none of the technology that's out there. It's pretty good, but I want you to understand what it really is. When you're looking at a scanner, you're looking at something that is made and created by the people who run the market. Are you really believing that they're trying to give you a leg up on how to steal money from them? You got to answer that question one day for yourself. I'm not asking Casey. I'm asking all of you to think about that. You guys are looking at all these scanners and indicators that are like giving you these signals of buy and sell. You really think these brokers want you to win and they lose? You got to think clearly about that. Be careful when you're reading those things. Half the time when they say sell or buy, it's because it already moved up or down, and now you're jumping in at the last minute after the move. That's not a good way to trade. You don't wait till it does this and then jump in. And that's what those scanners are doing. They're looking at this and then they're saying buy. But it's saying buy because it already went up. I want you to tell me to buy before it goes up so I can get in at the beginning. So be careful with those scanners or anything that's telling you to go long or short, and it's some program and it's not you actually taking into consideration. So do what I'm doing, use it, but use it in conjunction with knowing how to chart and read for yourself. That's all I'm saying. I'm not saying they don't work. I'm just saying be careful, because more than half the time they don't work because they're delayed. It's delayed data. It's not forward data. So already they have some demand down here. They're going to be coming back to the bottom again. This company's going to they have the potential of tanking again, but we got to see from where. This thing is not working for some reason. I think your trade will work out though, Casey. I mean, just from first glance, looking at it with my eyes, I haven't charted it yet or analyzed it, but just from first glance, it looks like you're going to win that trade because it already has momentum. It's already violating this downtrend here. If it breaks this, I see it continuing to go up. So right now, it's currently in an area where it could short. Need to see if it's going to break that. Let's go down to the. I need to see what it's going to do with that area where it's at. It can short from here. If it pierces it, then it's going to keep going up. But if it doesn't pierce it, it's going to short. And the most quality level is way down here. I don't see it coming down here fast, but it's possible. But then that would mean you would need to get out of the trade. So let me check. Okay, so they haven't hit that yet. They're turning before it. Let's put a white line there so we can see the difference. So see where it's at? This is a drop base drop, this area here. So it's possible it could turn right here. It has not broken that blue line. It has to break that blue line It has to close above this in order for me to believe that it's going to keep going up. Otherwise, it's coming down. So I would just be patient and watch this. Let me see if I can give you a all right, so we'll do this. All right, so our pivot low will be this guy here. Our pivot high will be here. Let me delete this. All right. All right, I'm just seeing if there's some overhead supply on here. January 2010. That was a while ago. There we go. So we do have something in here, but it's a little higher up, so you might be blessed in that regard. And it's right at mid pivot too, so that's perfect. So seeing that there is some overhead supply here, starting at 40 even, that's where the overhead supply is starting at. You wouldn't want to go higher than 40. So you're at 45.50, you'd be at the top of this. So the top of this zone is 48. So you have all the way up to 48 to make some money. So between 40 and 48, it's going to start turning and going back down. So what I would do is, as price goes up, when price action hits 40, what I would do is I would move my stop loss to 37. So you have GRBK, and we're looking at the 10-day. That's the chart that's up. And you have a buy order at 36. And so how can I say this? When price action reaches $40, then move your stop loss to 37. prepare for anything. Prepare for price action to short somewhere between 40 and 48. Just typing this up for you in the chat group. There you go, Casey. So right now you have a buy at 36, and when price action reaches 40, if it does, if price action goes to 40, then move your stop loss to 37 so that you can protect your principal, and prepare for price action to short somewhere between 40 and 48. So just hold it, change your stop loss so that you don't lose any money to something higher than the way where you got in. That way that capital is protected, you don't lose anything. It's better for you to make $1 than to lose $4.89. So that's why I say move your stop loss. So that'll be my suggestion for GRBK. You'll have another opportunity to buy if you really want to buy low. I'd get rid of this. We do 547 is what I do. There we go. Also for GRBK, again, looking at the 10-day, you have another opportunity to buy at 547. And if you buy at 547, you can come back to this area again because it would have already been touched. So you can either target this or you can target something higher if you want. But it'll be, let's see here. What do we have? So this is what we would have here. And then I'll give you this chart. Not the whole chart. Hold on, I don't want this to be on your chart and then it confuses you. I gotta get my default settings switched up to this instead of 0. Because now that we have crypto, I'm running into a lot of stuff at 0. So anyway, getting back to this here, 547. Here is all your TPs. The areas where you can take profit at if it goes up there. 29. All right. All right, and then let me save this chart for you. That was a 10-day chart. Green Brick Partners. GRPK. All right, there we go. So if price action returns to the demand area around the $5 range, then we'll have an amazing long-term uptrend opportunity. And what you can do is shave here at 50%. Shave here at 50%. And then you can close this one out. All right. All right. All right, let's do this. And then we'll go back to dollar CAD. Any questions, Casey? Hopefully this helps out. Two. All right, so let's get back here. So this is for a long position. You're not bothering me. I trade stocks. They just don't pay my bills because they take too long. My bills are due every month. I ain't got time to wait years for money. But you don't bother me. I trade stocks. I just trade stocks for long-term investing. I don't do day trading on stocks because it's just too short. I mean, it's too long. I don't have the patience for it. I know people who do have patience for it, but I don't. And I don't like depending on a company to have to do better for me to make money. I don't want to do that. Forex, money ain't got to do nothing. Money can go bad or good. And because it's going against another country, one of them is going to be winning all the time. While one country is doing bad in their currency, the other country against it is doing well. So the market's always moving in Forex. It's money. It has no feelings. Either your country's doing good or your country's doing bad. There's no in between. And I can take advantage of that all the time and immediately. I can't take advantage of a company doing bad or good. If it's doing bad, I can't do anything about that. I have to wait. But if currency is going down, I don't have to wait. I can short it. So what do we have here? GRBK. All right. And we'll publish this publicly. That way you can see it. And that'll be it. I always publish these because I want to see how it worked myself. If you guys see this, just pull it down like that. That's the oscillator. I forgot to take it off. But yeah, this is what I see. I think that you're going to have some resistance here in this area near mid pivot. It's going to pull back. When it does pull back, it's probably going to pull back to where this TP1 is, right around 29.80. So you definitely want to get out because you're at 36. It's going to pull back more. 30. That's where you want to start monitoring it. You want to make sure your stop loss is positive so that you make money if it turns around. And you just hold it until it gets to your TP. If it doesn't make it to your TP, you're still going to win your trade because you changed your stop loss. You're still not going to lose. So either way, you're going to win. All right. And then give you this link here. There you go, Casey. Green Brick Partners. Give me 1 second. All right. Anybody have any other questions or anything you want me to look at? I'm going to see what Dollar Cat is doing in just a second. Create link. Just making a post in my company real quick. All right, so let's get back to this here. Dollar Cad, how are you doing? Because we're at 9 o'clock now. I'm about to get off of here. Just want to, let's back positive again, looks like. Are we? Yes, so it's green again. All right, so it's just bouncing back and forth. It looks like it is continuing the uptrend, and it's not gonna give me a second opportunity by coming back down. So that's fine. That just means that we are heading up to this level here. We're actually heading up to this sell limit order. So they're just gonna take their time and get up there. So I'm just gonna hold this until it gets up here. If you guys want to jump in dollar CAD short, this is me taking a risk. Dollar CAD is in a short right now. So I'm taking a risk by going long and then by going short again. So I'm just trying to capitalize on the back and forth. All right, so $1.34.25 and $1.34.34 is where I am at for my entry to short on dollar CAD. And then for Euro CAD, I think we were trying to look at it. And we did determine something because I had already charted that from the past. Did I save it? Oh yeah, we did do this. We did the dollar cost averaging on this one. Okay. All right, so let's do this one here. This one's Euro CAD. I'm going to chart this one and then finish annotating it. And then I'm going to post this in the group. And then we'll be done for CAD news today. Governor didn't say much, obviously. So Euro CAD, we're looking at the possibility of an uptrend here. And then let's put those orders in here. I'll just use these. 143.50. Put that at the bottom, to the right. Buy limit order 143.50. All right, so that's the first one. Let's clone this and let's do another one. And we'll do $144.50. So this will be the first buy order, buy limit order 1. This will be the third one. And then we need a middle one. Let's clone it again. And we're going to do 143.86. Let's do 85. Now let's keep it. Like I said, that was the six. The middle was 6. 143, 86. Put that in the middle. It's number 2. It's in the right. All right, so there we go. And then I'll take this part out. And you know what? I'm gonna, since I see this here, I'm just gonna what was it, the 5-month as well? Let me check that. What did it say? Euro dollar, I mean Euro CAD. Oh, 10-month and the 1 week. So let's check the 10-month. Oh, that's why. So the 10-month says Euro CAD's going way up here. That's why I have these 2 orders here. All right, so let's go back to the 1 week, and then let's put another TP under all of this. Let's get one maybe at this pivot high here. So 151.15. Let's do that. And let's put that there. 151.15. Is that what I said? I think so. Yeah, that's it. So I like this. So we'll hit a TP1 right when it gets to this resistance level, this pivot high here. And then we'll see if we can get a second opportunity at the proximal entry of this supply level. And then in case it does, this is called a level on level, meaning there's 2 supply levels on top of each other. In case it goes a little higher, we'll also have a TP up here. So I'm going to shave 50, and then close at the top if it lets me. Otherwise, I'll just have a positive stop loss somewhere. And, you know, by the time it gets up here, you guys should have already moved your stop loss to a positive one and not have it negative. So once price action gets above, you know, once it moves away from you about 20 to 40 pips, don't let your stop loss be negative anymore. Change it. Manually move and trail price action, because if it pulls back, even though it may knock you out of the trade, it's going to put some money in your account. You can always go back and chart again. So we have all of these here. We're good. All right. Save that. And then let's take a look at it real quick before I publish it. So now you guys can see what DCA looks like. Dollar cost averaging is when you put multiple trades within a specific price range because you're not sure what price within that range the institutions are going to turn around. And so what you do is you just split your position up into multiple. You can do 3, you can do 4, you can do 2. There's no rule to dollar cost averaging. But basically you're just averaging out what it's going to cost you in the amount of risk. You're averaging that out by splitting up the position. So that if you're wrong, you're not closing out a full position. You're only closing out maybe 1/3 of it because only one of them got triggered. Or you're only closing 2/3 of it because only 2 of them got triggered. That's the idea of the DCA. It limits your amount of risk. And then if all of them hit, then it just means you're in a good position and you most likely are going to get all of your whole position. But this kind of, if you're not sure, this is a good way to put it in. All right, so I'm going to go with this here. Let me turn off. There we go. All right, give me a moment. Let me write this one up here. So we have EuroCAD, and we're in an uptrend, and the time frame that we're utilizing is the 10-month and the 1 week. TP3 is 155.15. Our TP2 is 153. And our first TP is 151.15. Our buy limit order 1 that's going to trigger is going to be at $1.4450. If it continues to short, our buy limit order 2 is 143.86. That was the mid pivot price for that zone. That's where we got that number from. And the bottom of that zone, if we're going to DCA it, we're looking at 143.50. Waiting for uptrends on all of these. All right, almost done. And that demand zone is on the 1 week chart as well. Doing the free funded challenge, trading CAD yen and dollar yen and back. Okay. Awesome. Around the 144.50. All right. Looks like we're good. All right. So now I just got to publish it. So let's publish. We'll make this one public. We're going long. And what are we doing here? We're going to do EuroCAD. There we go. Okay. All right. So from today's webinar, we did EuroCAD. And as you can see here, if price action returns to the demand zone, and the demand zone is on the 1 week chart. Where is the demand zone? This red candle right here. That's what I'm saying. So if price action returns to the demand zone on the 1 week chart, which is around the 144 range, then we'll have an amazing long-term uptrend opportunity. I have chosen to dollar cost average my entry since the zone is large. Let me say it first. Sounds like it'll make more sense. Glad you guys are hanging out with me. Get to see what I do live. All right, so since the zone is large, I've chosen to dollar cost average my entry with 3 buy orders. See above. And these are the 3 buy orders here. And TP1 and 2, I'm going to shave 50%. And then the last one, I'm going to just close it if everything works out. Any questions? Anything you want me to chart before I get out of here? I don't know when I'll be back. Make sure you follow me. Make sure you have your notifications on. That way when I'm online, you guys get flagged. Because I don't have a set schedule. I have multiple companies and I just get busy. So I do this whenever I can. Plus I'm training other people who are looking to, get into this seriously and all that. So I just schedule's packed. All right, so this is what I have here. We're gonna go ahead and publish this. Bam, it is published. Why did it do it that way though? Oh, because I had this picture up. Ugh, I hate when I do that. All right, let's do it again. So let me delete this one. It captured the wrong picture. There we go. I wanted to catch the whole picture like this. All right, so now let's publish it. Bam. All right, that looks good now. And public analysis, we're gonna go long. I did support and resistance, supply and demand, my typical. Bam. Euro and CAD. All right. Let's try this again. Yay! Now we got everything in there. We got all of our buy orders and our TPs in there in the picture. Perfect. Picture perfect now. So let me copy this. Send this to our signals group. Or our chat group, actually. There we go. All right. Any Any other questions from anyone? Trading CAD yen and dollar yen and okay. And BAC. So I think we already did those. But all right, you guys. Well, it was glad having you guys here. Casey, as always, glad to have you on here with me. We looked at a couple. I got another meeting to get into, but I appreciate you guys. We looked to see if Governor Macklem was going to say anything. I didn't see anything major that had happened. There was some trading earlier that took place this morning at 5, but I don't get up at 5 in the morning LA time for CAD no more, because it typically is like this, not much. So it's not like the US that kind of pushes a lot more. But yep, here we go. We are currently green on this trade. It's still, moving side to side, but I do see dollar CAD going up here and then shorting. And that's it. You guys have a blessed one. Take care.